Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, September 26th, 2025. Ron Quaranta here with my dear colleague, David Brill. Josh Clayman, David may be out on assignment or somewhere on the Gulf Stream, not sure yet, but hopefully she can join us. For everyone in the audience on LinkedIn and on X and on YouTube, thank you so much for joining us. If you have questions for David or I, please do put them in the chat. And our usual disclaimer is obviously everything David and I are discussing are really our own personal opinions, don't necessarily reflect the opinions of our firms, and certainly nothing we discuss is investment or legal advice. David, it's been another crazy week. I'm just going to say it, buddy. I go to the UK for a few days and the markets go bananas. What is happening here?
Well, it made me think of this Einstein quote where he said, time is what keeps everything from happening at once. But it really feels like everything everywhere all at once.
All at once.
So, what's really interesting is we're getting very positive, numbers out of our economy, and, jobless claims were down a little bit. All the type of things that you would think would lead to crypto going up. Mm-hmm. But we are in September, and we know what happens in September, and so we are where we are.
Yeah, David, I've been thinking about it a lot. I spent way too much time thinking about it on the journey back from the UK. And shout out to all my friends at Global Legal Group and Elise Susi and Emma Channing. If you're watching, it's good to see you in person. You're amazing. David, I was thinking about it a lot. There's the seasonality to what we see in crypto, the same way you and I have seen seasonality to broader equity markets or fixed income markets. I think one of the things I'm also thinking very much about is the underlying data. So, I've been looking at the data across the week, and I think we saw something like PCE data came in slightly higher. And you and I work very hard to parse through the noise of it. I would argue someone will see that it was 2.7% and it becomes, oh my God, the sky is falling, inflation's rising. Literally the exact same data will be, it's only 2.7%. It looks like data, inflation is moderating. I've never envied people the job of having to base investment decisions on data like this. Let me add one more to that. And David, I'd love your thoughts about it. We're seeing job growth being fairly good, relatively speaking. I think someone estimated annualized GDP of 3.9%.
Yeah.
But again, it's the revisions. Job data from earlier this year turned out to be much better than it was originally reported. David, how do we make investment decisions like this in this environment?
I think sometimes you just have to focus on the fundamentals of your own company or a specific token to the extent there are some.
Yeah. And
you have to just look at the macro environment. Are there still buyers for products? Are people, personal income went up, I think, or personal spending went up 0.6%. So people are still spending. I think the idea of 2% inflation is kind of in the rearview mirror for now. I think maybe it's more like 3% as long as we're under 3%. But I think you have to recalibrate a little bit based on what the facts are. So I think that's one way to look at it. And I think what I also think on the job front is very interesting is that there are a couple of sectors where there's a lot of hiring going on. Yeah. There's a Wall Street Journal article about M&A, bankers, M&A bankers, and people who work on IPOs. There's a real demand for people in that sector. And there's also a real demand for people in the crypto sector. There's a lot of hiring going on in the crypto sector, across, whether it be engineers, lawyers, people in finance. So we're really seeing a couple of areas that are really continuing to grow.
Yeah. David, I want to peel back the layers of that as well, because I see the same data. I agree with you. It's interesting to see how that develops. I guess one of the other questions I've got from the perspective of this is, again, how does a financial firm plan in this environment, right? Like when we look at those hirings, and I don't want to raise the politics of it, but it's almost unavoidable. Stateside, we're looking at a potential government shutdown, which, whatever anyone's perspective, I think is always a really terrible thing. You're probably looking at several 100,000 federal employees that may or may not be fired. Again, a terrible thing. But I'm wondering about, October, November, December in global markets in the wake of something like this. Again, none of this is investment advice, but how does someone prepare?
I still think it's sort of like look at the fundamentals and just see. Like,
Yeah.
also, like we have to remember that there's all this noise about how much the tariffs were going to affect revenues and
Right.
earnings, and it just hasn't come out that way. So I think taking a more reasoned approach and not just thinking the sky is falling. Like, look, obviously a shutdown is not helpful.
Yeah.
Uh, New tariffs, depending on how they're implemented. There is a goal with the tariffs. It's just a matter of how will they affect our economy. So I think the problem is people just have to deal with more. I won't call it instability, but just not having certainty on what's coming. And
Mm.
maybe they have to just sharpen their pencils a little more and just really be thoughtful about the different scenarios and where they
Yeah.
think things are going.
And for me, David, it's always about the don't panic. Look at the use cases, look at the underlying. Shout out again to Emma. And I've got a story about Emma. She's an amazing trooper, David. I'll tell you later in the broadcast. But her anecdote is that she's seeing a bunch of local property in Colorado that are up for sale, either cutting price or going for a 12-month rental. To David, the point
Mm.
you had made last week, as we begin to see the impacts of some of these issues across the economy. David, when we look at that as well, looking at prices, and you and I joke, we'll text back and forth about price moves and all of this other stuff. We do that with colleagues. But one of the interesting things I've been thinking about is when you look at Bitcoin down over 5%, Ethereum down over 11% in a 7-day period, I think Solana was down something like 15%. I'm probably going to mess that up. 17% in a week period. There was good news in the crypto space, and I'm a little shocked at the response. I think it was Morgan Stanley's E-Trade will be offering crypto. I believe they're also potentially offering digital wallets to the E-Trade platform users. Is this a buy the rumor, sell the fact response as well?
I think this is just people always say September is like a bad month for Bitcoin and crypto.
Yeah.
And I feel like some people have just willed that into existence. Even they may not have wanted to, they just sort of like, oh, this is a bad month for it. And we had a lot, and also leverage. We always talk about leverage. And there's a lot of leverage in our markets, and people are running, I won't say running, but markets like to go to the leverage points and like to flush some of that leverage out. And we had 2.8 billion of long liquidations this week. So, people are looking for that. And then the options expiries today, and this is the largest one ever, 22 billion. And, there's like a max pain point, I think, for options holders was at 110,000. And, where's Bitcoin? It's around 109,000. So,
Yep.
There's one other thing. I was trying to explain options to some friends of mine because somebody was asking me, and I made a little notes about it. I won't get too wonky, but here's what I wrote, and somebody had shared this with me, part of it. But when a big player is in a position of negative gamma, they have to hedge with more options the further the price goes down. This amplifies price movement and volatility, pushing price even further down. And so I think what we're seeing is, some bigger players had a lot of options and were on the downside of those options and had to keep buying more to sort of protect their positions.
Yeah.
So I think that has something to do with it too.
David, the other dynamic there, when we look at options expiration, when we look at liquidated positions, I'd love your perspectives. My instinct and some of the preliminary data I look at tells me those are a lot of retail positions that are liquidating. Is that incorrect?
I mean, I think there's a lot of hedged institutional positions too.
Yeah, fair.
But they're not all losing money necessarily. Like, they're hedging against long exposure. They're hedging in another way. But ultimately, the market really likes to, go after sort of the leverage points and where a lot of liquidations sit, both on the long and short side, and also in this case, really inflicting max pain on people.
Yeah.
I think the one thing people have to remember in crypto is things move fast.
Yeah.
I'm trying to remember, there was some quote from Fast Times, where
You're bringing up Fast Times at Ridgemont.
Yes, I love movies, and I like interesting quotes, but sort of if you don't if you're not pay attention, the world will just pass you by. Crypto moves very fast.
Yeah.
We have a lot of leverage in the market, so we can see these big moves, and I can tell you, I've been paying attention that overnight, it seems like every night around 2 or 3 in the morning, there was a 2 or 3% sell off, and then sort of dealing with that. So, And also look, there, holidays people celebrate, and there's sort of less people, focus on the markets in this, next, 8 days of this week and part of next week. And so,
Yeah.
less liquidity means more movement sometimes.
David, absolutely. Shout out to our good friend, Greg Murphy, WSBA member up in Toronto. Negative Gamma is a killer. Throwing the Greeks at us. We'll probably have to get Greg to do a seminar on the Greeks one day. David, I want to macro out on some of this as we look at the price action here. And again, we've talked about the percentages down. We could talk about some of the perspectives on the other side of the pond. But when we look at the economic data as well, 2.7 on PCE. We've gotten our 25 basis point interest rate cut, and we've seen a lot of futures moves that impact crypto broadly, looking at whether or not we'll see a sustained number of interest rate cuts throughout the balance of the year. David, are interest rate cuts in your mind a lock for the balance of the year?
Nothing is a lock.
You do better than to answer that, David.
That being said, I suspect we'll see at least one more. Look, I think these rates, and it's also not just what the interest rates are, but it's like what the lending rates are. So right now, like the 30-year rate being high is a problem for like our housing market.
Right.
And even if we cut rates, it solves some of the issues, but doesn't solve all of it. Because obviously the bond market's looking at all the debt and said like, and is looking at it and saying, even if you lower the interest rates, this is what we need to get paid to buy these bonds for this duration. So kind of walking a little bit of a tightrope, but hopefully we'll get some relief with some rate cuts. And I think at some point people who are going to sell or need to sell will have to sell, and I think there'll be some price adjustments.
Yeah. So David,
what do you think, Ron? Like,
I tend to agree with you. I think the one more interest rate cut aligns with that. Again, not envying anyone at the Fed their job, and I'm definitely not going to talk dot plot. But I think when you look at some of the underlying data, I think a 25 basis point cut between now and the end of the year is good. Depending on how the data adjusts, we might see a second plot. Polymarket has 25 basis points cut in October at 81%. Emma, thank you so much. David, I want to add one more data point to that, though, and I'd love your perspectives. One of the things I've been keeping my eye on for a while, as you probably know, is the VIX. And the VIX has had a nice or bad leg up, depending on your perspectives. We were 14 before I left, 14 and change. We're over 16. And the volatility index, David, as you and I know, and our audience knows, has a term structure. It is pointing at future volatility. And we can have really convoluted arguments about government shutdowns and options expiration and potential Fed cuts. Are we looking at QE? What do you make of the VIX over 16 approaching 17, David?
I'm curious if it gets to 20. That's when I'm really going to start paying attention.
Okay.
Look, we're going to see more volatility if we have a shutdown. Or the closer we get to a shutdown, we're going to see more volatility with the VIX. But, look, I think we also have to remember with prices, like we've had a really strong year so far, especially Bitcoin. Ether has given up more of its gains so far this year, but we're still doing well. What I'm really interested in is there's like the decoupling between gold and Bitcoin right now too. So I think that's kind of interesting. So I think personally we need to let the next week play out. Let's see this options expiration. Do we get a shutdown? And then are we going to start seeing October? Which I think if everybody willed into existence, that September's always a down month, and it's happened. Everybody's been talking about October and how October's a really good month for crypto. So maybe we just see, a turnaround in October.
David, you brought up the metals, and I wanted to dive into that a little bit. And I had a conversation with a friend on the decoupling of gold and Bitcoin specifically. And gold's up phenomenally this year. I want to say, and Greg probably knows this better than I do, but 30 to 40%, I want to say on the year. I think silver's up at 50% or so. Could be wrong, but Bitcoin really not keeping up with that. One of the arguments there, David, has been, well, and I'm just going to paraphrase this, gold is the true is the true inflation hedge. And I pushed back on that a bit, but do you think there's some truth to that commentary?
I mean, I think there's some because, while we're like totally in our crypto world, not everybody is in our crypto world. And
How dare
so, there's a lot of people, and there's some people who can't access crypto because we've talked about that, different exchanges or, they're not accessible to wirehouses. So I still think gold is sort of that, serves as that function. But I
Hmm.
mean, look, if you've been owning gold, like you've been on a run. You've been on a very epic run the last few years.
Yeah. Which you would not have imagined, because I remember gold in the 1700 range USD, I think for the better part of a decade,
Yeah.
which
Yeah.
with inflation is just a terrible number. We got the comments coming in. Greg Murphy, thank you, buddy. Watch out for forced liquidations on BTC held as collateral. Really good point on loans of USD. Not seeing it yet, but forced selling from options could drop BTC down. David, this is what you and I were talking about in the virtual green room. Anything below 100, in my mind, unless I'm looking at the data wrong, legs us down to somewhere around 80, 82.
Yeah.
And I could be wrong. And Emma is hitting up Polymarket again, shut down at 89% and climbing. Love politics. No, I don't. But Emma, thank you for sharing the data. So, David, we'll spend a lot of time looking at the data over the coming weeks. Let's hope that there's no shutdown aside, including the human aspects of people losing jobs and being shut down
Yeah.
like that. David, the other thing that caught my eye, I've joked about it, but I sort of mean it. The crypto treasuries, everyone's saying DATCO, so I'll just say DATCO. We've got DATCOs for everything and growing. We've seen the DATCOs. I think we talked about it last week with DATCO roll-ups or mergers. I guess one of the things that really jumped out at me is the early trading patterns ahead of DATCO launches. And I don't know if you saw the news around the SEC
Mhm.
doing some investigations. This tells me something I don't like to think about, which is that some of the shadier participants that probably shouldn't be doing DATCOs, or some of the DATCOs that probably don't make economic sense, are coming to market. David, did you see that article, and do you agree with my perspective that we're starting to see peak DATCO, at least for the time being?
I think we're seeing peak wave one of DACOs.
Yeah,
Um,
agreed.
but I'm trying to be more of the optimist. I think that most likely people were pitched some of these DACOs. Like, look, you and I were pitched,
Yeah,
several of these DACOs.
that's right.
And, perhaps they didn't hold that information as closely as they should have, or maybe, maybe some people acted on that information. And so there's trading in some of these entities that moved before it went to the market.
Yeah.
I mean, I'm not involved in any of those matters, I haven't been retained in any of those matters, but that is my sense. I think also that the way crypto works is sort of a lot different than the way the stock market works,
Fair.
and the way information is transmitted. And I think the lines could have gotten blurred. I'd like to think it's not nefarious, and I'm trying to sort of like take that view, but it's
Mhm.
very easily that people who are used to trading crypto were acting similarly to a way that they in the stock market,
Yeah.
and obviously the rules are different.
Yeah, and look, to be clear, David, I'm with you. I'm not throwing out there the idea that it's illicit active. Particularly, I'm really throwing out there the idea that some of this is moving down the quality curve, from the perspective of what treasury companies should be out there. And we see this as increased liquidity builds up in that space, the premium over the asset value itself across the board are compressing, as I understand it.
Yeah, look, I think that it's always what the market will bear, right? And so I
Yeah.
think in these cases, everybody wants to get to market and be first. So they're, buying shells, or they're merging with public shells, SPACs, or other ways to get to market. But,
Pipes.
pipes.
Yep.
But what's happening is, and I think what people forget is that sometimes when you use, depending on the structure you use, you can't use the money you've allocated for a period of time.
Hmm.
You can't issue shares for a period of time.
Yep.
You have to get different, shareholder or board approvals for a period of time. So I think some of the DACOs haven't even been able to, deploy their capital because they haven't fully been funded yet. So I want to give some benefit of the doubt, but I do think there's like saturation in this current phase.
Yeah.
Again, until everybody has access to buy the different tokens, this is, in some ways the only way that they can get access to buying some of these tokens if they want to buy them.
Yeah, David, good point. Again, shout out to Emma, really on target with the sources. The block
Yeah.
article is probably the one I had noted. SEC FINRA examining trading patterns of digital asset treasuries. It'll be interesting to see, David, where that goes. One of the other things, David, also we should talk about is, again, politics aside, the legislation,
Yeah.
one of the items that came up with some colleagues that I spoke to in the UK was what's market structure going to look like in the US? And my response was, I have absolutely no idea, particularly what's happening in DC. You know, David, you and I have been to DC. You and I have met with staffers and legislators. We've met with regulators. If we look at clarity and whatever iteration is out there, what are your thoughts about having a market structure bill before the end of the year?
Look, I think it is a bullish. Uh, it's bullish that 12 Democrats, put out a proposal, and that they decided that a certain group of the Democrats want to negotiate with the Republicans, and um, I think engagement is really good, and I also think that we can't underestimate the lobbying that's been done, the donations that have been made, and it's really bringing people to the table. And so I think that's really important. My hope is I took some notes about what was in the Democratic proposal, and some of it, about exclusive jurisdiction over non-security crypto
Yeah.
matters, guidance on applying securities laws to digital assets. There's some concern they raised about, the Republican proposal is really just the industry's proposal, and Elizabeth Warren said we're moving too fast. But I think the way I like to look at it is, we didn't move for 4 years at all.
Yeah.
If legislators are seeing this opportunity for our country and for the ecosystem, if we are moving fast, it's because we really are in year 5 or 6 and not just in year 1.
Right.
These
Right.
issues have been thought about, quite a bit. And so I don't agree that we're moving too fast. I think we're really making up for having moved too slowly.
Yeah. David, sidebar real quickly. I just got
Yeah.
the note. Josh will not be able to join us. She's somewhere traipsing the halls of Wharton and a fire alarm went off or something. So hopefully all's good, but we'll get her next week. David, it's a really good point. It is interesting, and I'm sure we should have sent the invite out for Emma. I know she's busy, but the conversations we had in the UK, I had met with some colleagues, and I had the privilege of moderating a panel on crypto businesses. But one of the sessions talked about how regulators in the UK are approaching crypto. And David, I heard the words that you and I had heard talking about the former SEC chair, for example. Like, it's really this reversal of fortune, and there's this concern in the UK that there's really not only not a proper regulatory focus, but also just a lack of education on the other side of the pond as well. So it really is interesting to see that 180 across both sides, but how it develops and impacts the global markets as well. David, I'm going to do a sidebar again. I'm going to shout out to Emma, telling everyone a story. Showed up at the event in the UK, and for one of the other panels that I wasn't a part of, the organizers, Rachel Williams and Robert, did a great job. Said, Ron, can you sit in on this additional panel? And I respectfully said, sure, but there's a smarter person you need. And that person was Emma Channing, and she kindly agreed to do the panel, and it really upped the caliber. So Emma, you are a trooper. We haven't had Risk On yet or Risk Off yet, and there's going to be no Josh. Yes. I will not say Risk On or Risk Off. I feel like that's Josh's territory, David. But, a lot of other things going on in this space. One of the other things I'm focusing on, and I know we've only got a few minutes left, it's a short session today. David, October 23rd, the WSBA Crypto and Blockchain Summit. We've got probably another week or so worth of tickets left. So if anyone's watching, please do register. Emma will be there. David will be there. Greg hopefully will be there. It'll be a great session. David, what have you got coming up in the coming week?
There's a lot going on. First and foremost, I'm really looking forward to that. And then I'm also looking forward to us being part of the AICPA event. So that's another event that we'll be a part of. And there's a couple of other events in New York that I'll be coming up for as well. I'm really focused on staring into what the fourth quarter looks like. I happen to be very bullish on where we're headed. And I really think that even if we don't get a market structure bill by the end of the year, which while I'm hopeful for, I still think in my crystal ball goes into early next year. If we can make meaningful progress on the thornier issues, I think that would be great. Mm-hmm. And what I would like to see is less sort of the noise about who drafted this and who, the politician issue I want to leave out of it. It's not something I want to focus on. But I would like us to like, make ground on the substantive issues. And I know one of our friends, Andrew Siegel, is now working on the Hill, and I know his thoughtful, views on things, having been in the middle of working for Galaxy and been in the middle of other crypto initiatives. I think we're getting more really thoughtful people down in Washington, or even adding to those that are down there. So I think that will be really helpful. So I think I'm really focused on that. And then a lot of I'm very curious about how the market reacts in the next few days.
Yeah.
All coins have really gotten pummeled. And we don't give trading advice, but I would certainly say that some of the ones that I think are high quality are even more discounted than I thought they were originally. So I think I'm really going to be paying close attention to that. And then obviously work has been quite busy, so there's plenty to do on that front.
David,
Ron?
Yeah, well, look, I've got a lot of work to do to prep for the 23rd event with myself and the team. A couple of things real quickly. I also, David, like you, look at some of the indicators, and again, none of this is investment advice, but when I look at crypto-specific indicators, including the fear gauge, I mean, we're pretty deeply in fear territory, and relative strength index is pretty oversold.
Yeah.
I'm wondering if we build a floor around the 107, 108 level for BTC. So I'll be keeping an eye out on that. The other thing, David, I'm going to build out my thesis. And again, not investment advice. Had some conversations with some friends in the UK during the week, and it was a Ethereum versus Solana conversation. And I'm still kind of stoked about the throughput and capacity of some of what Solana does on a transactional basis. That's not negating all of the work and the level 2s that build on Ethereum, but I'm going to be plumbing the depths of one or the other, trying to understand what that means for our colleagues in global financial markets. Last bit, David, I probably should have asked you. I'm going to publicly do it on the live stream. Are you in New York next week?
I am not in New York next week. I will be in New York the week after. But there's one thing I do want to mention is that Vitalik just came out with a blog about it, on some of his thoughts on Ethereum, and really about, even though his vision may be different, he sees the need to commercialize some uses of Ethereum. So I will share that with you. Yeah. And maybe we'll put it in the notes, because that was interesting. And so I feel like, the move is shifting a little bit. And I think Ethereum is really thinking about how do you commercialize Ethereum and make it, useful for many different uses, but ones that institutions can use. And so I'm still very bullish on Ethereum. I've been bullish on it since it was, I first saw it at $10. I've been really bullish on it. So I'm going to continue to be.
And again, I'm not negating Ethereum. I'm not anti-Ethereum. And Emma's ETHs and Ethereum virtual machines 100% versus Sol. Again, I'm with you, but to me, I'm looking at. I suspect there are different use cases across markets where both sit potentially very, very comfortably. David, one last thing. The reason I bring up next week, for anyone in the audience who happens to be in New York, the next WSBA Networking and Cocktails is Wednesday, October 1st. If you're interested in joining us, drop us a note, info@wsba.co. Hopefully you can meet some other WSBA members as well. David, let's leave it there. It's good to see you, buddy. You were missed in the UK. Emma, so good to see you. If you want to have a really intense debate with Emma and anyone on any panel, bring up maximum extractable value, David, and you will get schooled by Emma. It was brilliant. But let's leave it there. Have a great weekend, everyone, and we will be back next week. Bye-bye.
Thanks, everyone.